Major funding for these programs is made possible by grants from Chase Commercial Term Lending and Capital One Bank, New York Community Bank, the Witkoff Group, M&T Bank, Perfect Building Maintenance, Genova Burns, Gian Tomasi and Webster, Greenberg Traurig, Kilroy Architectural Windows, New York's Window Company. Additional funding is provided by grants from AKA Hotels, Corman Communities, Aerial Property Advisors, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Colliers International NYC, CPEX Real Estate Services, Cushman & Wakefield, Customers Bank, DDG, Dime Savings Bank of Williamsburg, Douglaston Development, Levine Builders, First Nationwide Title Agency, Flushing Bank, Friedman, Gemini Real Estate Advisors, Hap Investment Developers, Herrick Feinstein, Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, James Orphanides, Chairman USRealty.com, John Katsimides, Red Apple Group, Margolin Weiner and Evans, Madison Realty Capital, Massey Knackle Realty Services, Matone Group, Meridian Capital Group, Newmark Grubb Knight Frank, Newbanks, People's United Bank, SJP Properties, Sterling & Sterling, Stonehenge Partners, TD Bank, Terra CRG, the CUNY TV Foundation, the Continuum Company, Urban American, and these friends.
So everyone is so happy. The economy, the stock market's the highest level, the real estate is doing great, the economy seems fine, retail is doing well, hotels, but I don't know. I have this pessimistic feeling that it's really not that great, but it's good. So as opposed to having the pessimist provide his insight, I put together these individuals who will provide their outlook on where they see New York City today. My guests include Mike Slocum, who is the president of Capital One Commercial Bank, Dennis Russo, who is the chairman of the real estate practice for New York, Baker Hofstadter, Fred Berk, who is the co-chair of the real estate practice at Friedman LLP, and last but definitely not least, my friend Josh Muss, who's the chairman and CEO of Muss Development. So I have a banker, I have an attorney, I have an accountant, and I have a builder, owner, developer. I'm going to start with you because you deserve to be picked on, okay? How do you look at it? You and I have discussed this all the time, especially since we are also working together for this nonprofit to give some advice to them. We've seen ups and downs over the years. How do you see it? Are we getting frothy? How do you see that? I mean, the prices and everything. You've never seen rents like this and all the other situation.
I certainly think that it seems to be in high speed. I don't think we've seen real estate as frothy as you put it in many years. I'm also cognizant of the fact that we have 7 years of good, 7 years of bad, 7 years of good, 7 years of bad. It's almost biblical in the way they do it. And we're starting to get a little nervous. I mean, one doesn't want to admit it. One wants to think that it's going to keep on getting better. I would prefer to be a seller today than a buyer, but it's all in the eyes of the beholder.
It's very, very interesting. One of your clients who just built a new building in Lincoln Center, Gary Jacob and I were at breakfast about a week ago, and we're sitting there, and I said, okay, you opened up the rental office, and what are you getting? What are you getting for rents? I said, I'll bet you what you're getting. He said to me, I'm getting $95 a square foot in rent. I said, it's $95. I mean, you're Amsterdam Avenue, okay? we're at the end of Lincoln Center. Nothing's wrong with Amsterdam Avenue. $95 a square foot is enormous. I mean, as a banker, how do you look at this? Because when we were talking prior to the show, with these high prices, banks have been reducing, not you, okay, other banks, okay, maybe the ones who have my, on the cups over here, but other banks have been, changing. What do you see, how do you look at the world today?
You know, it's like you say, it's not great, but it's not bad. It's probably still pretty good, but we see a lot of competition in the loan market for quality assets, and I think our concern is eventually interest rates are going to go back up. So there's a lot of stuff getting financed today at really low interest rates, and what happens 5 or 7 years from now.
So let's look at that, because, Fred and Dennis representing companies in this way, they're buying the property, they're saying, hey, I'm buying the property, I'm paying 3% on a loan, or 3.25% for this apartment. And, they're saying, I'll take a couple of years interest only, and then 4 to 5 years from now, nobody has a crystal ball. No one knew that the Fed was going to maintain these rates for such a long time. Something, as Josh just brought out, 7 good, 7 bad, over there, we don't know what the timing is. We have a crisis in Iran and Iraq. When you're underwriting, how do you look at deals today? I mean, I know that you guys look at its relationship and established. But, these other banks are coming out here, Fifth and Third, and U.S. Bank and all these other places. This has an effect on everybody.
It does. But I think that, I oversee our business across the country, and interestingly, New York still offers probably more attractive opportunities than markets that have less restrictions on what happens there. So there's still a constrained market here. There's still great demand, and for rental properties, I think the occupancy rate's around 99%. You can't find that in Houston or Atlanta or Dallas. And
Because everybody wants to live in New York.
Right. Right. From wherever you're from, you find, these people buying. There was a woman the other day that bought her 2-year-old, like a $56 million or something.
Wait a second. You're the kid who grew up in the New York market. You're chairman of New York real estate practice of a Cleveland, okay? And if I said anything about Cleveland, people, one comment is, nobody really wants to finance Cleveland. Even Bank of, Ohio Savings Bank, which is a New York Community Bank subsidiary, they prefer not to finance Cleveland. So what do you see the market? You've been on the market. You do a lot of hospitality. You do a variety of things. You represent banks. How do you see the world today?
Well, look, Mike is represent a lot of lenders. We also represent a lot of developers. Mike is right. Interest rates, as everybody knows, are keeping things down, and cap rates the way they are. Reality is that if you talk to most of your developer clients and the like, they still have a gung-ho attitude in respect of New York, because it is still the best market. It is the most attractive hospitality market by far. We're still building hotels, not as fast as we were a few years ago, I can tell you that, but we're still building hotels. People look to put their money, here is the place. Foreigners, I have a Chinese client that just came in, a developer, they overpaid for a property, which I won't name, by probably 15 to 20%, and they knew it. And they're happy to put their money here.
People look at New York as a safe haven.
It's a safe deposit box.
Safe deposit box. There's security, but we have certain other things. We don't have the same mayors that we've had for the last 12 years. We have a variety of situations. You represent a number of foreign investors. I know the firm does that.
As long as interest rates stay low, and Manhattan, everybody loves Manhattan, especially the young kids, and Brooklyn. I'm sorry, the tri-state area. I apologize.
True.
The man who...
I do apologize.
The Mecca of Brooklyn, the Mohammed of Brooklyn.
No, he's right.
And Brooklyn,
The kids love the tri-state area. This is where they want to be. Interest rates are low. Foreign money, as you mentioned, is unbelievable. We have money coming in from China, from India, from Russia, from Brazil, from Ireland. I just had a client who sold a 51% interest in a significant building at a 2% cap rate to a foreign investor. And when you have people like that coming in, the prices are going to just keep escalating. I agree with you. It is frothy. But with interest rates low and a desire to be in Manhattan, I personally don't see it ending in the near future.
I think it's going to be stable for a little bit of a time,
Yeah.
put it that way. I mean, You know, you're going to see places like Bushwick and the like, which, you know, was, my father was a fireman. It was burning down during the time when I was a kid. Now people are saying, oh, we're doing a beautiful project in Bushwick. Since this stretch of time for our expansion has kept going a little bit more, I think, than before, now you start working your way out right to Bushwick and the like. I think that it's going to stay relatively steady. It is frothy to a certain extent, but what you're talking about too, remember, are really core assets. So whenever you're dealing with a real core asset, the foreigner always comes in, not always, but always comes in.
you know,
And hospitality.
And hospitality.
Hospitality is
just did it.
booking because of the foreigners.
I just did it.
You know, Josh has the finest hotel in Brooklyn. He was the first one. He was a visionary over there. He has the Marriott at the Brooklyn Bridge, which, in addition to having the space and everything else, it has the largest catering facility, and it's a meeting place and everything over there. I, a couple of months ago, took a walk over the 59th Street Bridge and went to Long Island City specifically to look around what was happening. It was a Sunday. And I went to the left section, which was really more closer to Astoria, and I saw approximately 25 hotels. I didn't hear one U.S. citizen speak. Everything was a foreign language. But all of these hotels are being built there. Brooklyn, who has, you know, as we were saying, the buzz that people want to be there, you know, they don't have 27 hotels in Long Island City. You know, there's a question of saturation and the point. You know, when people, you grew up in Bushwick, you knew it. Is Bushwick the next place for the new White Hotel? I mean, you know,
My father grew up in Bushwick, but anyway. Go ahead.
No. But what I'm saying to you is that there are neighborhoods, okay? You know, whenever I discuss Brooklyn and we get to, Josh was the creator of Oceana, which is this luxury condominium, and you still have one tower being built there?
Yeah, we're finishing up the last one.
Now, when I talk about Brighton Beach or Coney Island, I always have the same comment from all the people here. It's too far. It takes too long to get into the city. It takes no problem because everybody wants to be. It's a 45-minute ride to Brighton Beach. Brighton Beach, at least you can get off the train and walk to housing. Coney Island is a difference. You get off the train and then you have a distance. So is every section, I mean, you know, we're talking that everything is good, but, you know, does this pass on? I mean, you operate, as we said, in many states, but you also operate in New Jersey and Long Island. How do you look at the world in those markets today?
New Jersey, I think, is spotty. I think there are areas that are okay. We do a lot of stuff on the Hudson, Hoboken, Jersey City. And when you get more into the state, we've done some office that has been a little challenged. It's kind of spotty. And Long Island, you know, is still sort of a self-contained area too. And
Well,
so we don't do as much out there. Everybody wants to kind of be, you know, if they're not in Manhattan or Brooklyn, they want to be pretty close,
See,
just because of all the commute.
That's the difference. I'm sorry to cut you off,
Yeah.
but that's the difference, because when you look at the things out in Long Island or in New Jersey, and you look at the effective rents, and you always look at the effective rents, they haven't moved in years. I mean, you're talking $27 to $32 a square foot. I mean, I do tons of leases. In New York, you move from 50 to 70.
But isn't what happening, I'm sorry,
Again.
New York City companies like ours are taking office space in the suburbs because you don't want to pay $50, $60, $70, $80 a foot. Therefore, you're opening locations and people are moving there because they want to work near their office.
Sure.
Yeah.
We're seeing a real ripple effect. I mean, let's face it, New York City is going to be relatively recession-proof because when times get bad, people want to be in New York City. When times get good, they want to be in New York City. So we're seeing that in the boroughs, and we're doing, thank God, work in Manhattan too. But we're seeing in the boroughs, all of a sudden we're getting better rents, and we're getting better occupancy, and in the better retail areas, we're getting filled up. In fact, vacancies in the last few years have been almost a thing of the past. It's just a matter of price, and if you price it right, you're going to rent it out. So I think New York City is doing very well, is doing probably better than anywhere else, and I think it will continue that way. It's just a matter of how high one expects it to go.
But, you know, as Mike was saying, you know, and Dennis was also alluding, you know, the office market in New Jersey, the office market in Long Island and Westchester really hasn't gone up in years. It's the same rent, and the expenses are higher. And that's why the Westchester market, the real estate taxes kill you, and so did Nassau County over there. those are the different situations. You know, you have an office in Long Island. It's a different business. Your client business that you deal with.
Different business. But with today's technology, we're doing work out of Manhattan, utilizing people on Long Island.
But he's
Right.
doing
We
that.
have an
but
office.
But he's doing that in the law profession with Manhattan doing work out of Cleveland.
Cleveland, Florida, 14 offices. I use
That's
associates at half the number.
We'll get there.
Yeah. Feel free to use our people too, by the way. Yeah, no, we're utilizing, let's face it, it's cheaper space. You pay people less. They're just as effective at certain things, and
Absolutely.
so you utilize them. And so it's going to
As long
work.
as you can manage them properly, it's a fantastic thing.
It's a great thing.
Absolutely.
Keeps everybody happy.
Fantastic thing.
So,
We have a big presence in Melville. We had 700 associates in a building there, and we plan to stay there for the very reason. Most of them live out there. They like being there. It's not that bad a commute if you need to come in to our office in the city. But you don't want to have your primary office in Melville and try to attract people from New Jersey or Westchester County. So that's why you end up in
Absolutely.
Manhattan, because then you can draw from
Manhattan's the
Jersey,
mothership.
Westchester, and Long Island.
well, you need to be here. You need to have,
Yeah.
just like retail. I'm not going to shift the conversation, but retail, we've been buying retail now. Oh my Lord, in New York City, it's
But
going
let's talk about retail. Let's talk about retail. Let's talk about hospitality. You know, there was an article, and I think Steve Cuozzo brought it out very well. The article say, poor Danny Meyer, 30 years, he can't afford the rent at Union Square Cafe. And Steve Cuozzo said, you know what? Look at his revenue 30 years ago and look at his revenue today. What's the rent? Okay? Bobby Flay is complaining that you can't afford to open up a restaurant, and he just opened up a restaurant. So the story of, that the landlords are gouging, okay, maybe in certain markets, in the meatpacking district and other areas, in Chelsea, or Midtown South, it's over there. But there is a lot of vacant space. Time is leaving. 6th Avenue is a very reasonable neighborhood.
Gouging is a pejorative word. What they're doing is the landlords.
That's what happens
if
when
you
you
recall.
went-
If
went
you
to
recall,
Harvard, I forgot about that.
I'm with Josh.
if you recall what I said before, we're able to get everything filled up as long as we ask for the right rents. So if you're asking for the right rents, you'll lease it up. If you're asking for the wrong rents, you don't lease it up. And if you're getting $500 a square foot in some side street, then you're getting the right rent. It's a matter of everything floating to the top.
Look, Uniqlo is planning to open up more stores. Everyone's coming to this market over here. Retail is very strong over here. Trader Joe's would love to have more stores. Aldi, this is the market. This is where we're looking at it. Are there any areas, when you go down to headquarters and they ask you where are the best opportunities, where do you look besides Manhattan? I mean, what areas are you positive on retail? What's your feelings of the hospitality market? In the region?
We don't do much hotel because it is a more volatile asset class.
Sure.
And we like to do not only sort of the interim loan, but we like to do permanent loans. And permanent loans on hotels is a little dicey. So we don't do too much of that. But we look at some retail around the city, and we see good opportunities there with a lot of very quality developers. And we do a lot of office in Manhattan,
And
but not a lot of office outside.
Here's something, the Trade Center is coming on board. They just approved he's getting the Liberty bonds to build the addition over there. Fortunately, Brookfield has done exceptionally well. They're nearly fully leased, even with the loss of Lehman and everyone else downtown. But are we worried about some of the office space in Midtown? Or, as I said recently on the show, where can that, not the Friedmans, where can that smaller nonprofit or that smaller law firm or the smaller accounting firm, they're getting priced out?
Nonprofits don't belong in Midtown. They belong where the office rent is cheap,
Correct.
wherever that
Correct.
might be.
That's correct.
And actually, there's a lot of self-help going on. A lot of the vacant office space is being converted to apartments. I'm concerned that you convert too many to apartments and you lose the central office district. And that could be a problem, because the greatest of New York is that you have a transportation that comes into the heart of New York City.
Any thoughts about this potential Midtown zoning?
Won't be built when I'm alive.
You don't think it's going to?
It may happen. It may happen. The question is, will it happen under de Blasio? I tend to doubt it. It may happen. That'll add space. Fine, but it'll only add enough as much space as we can take. I mean, we do overbuild every once in a while. But to answer your question, where is the spot for, the tenant that needs $40 a square foot, or 45, or even 50 as it may go? The answer to that is, and the crowd will listen to me and buy there, is in Lower Manhattan, Class B space. Yeah. If you're smart, you're buying Class B space there, because what you're talking about, Michael, is the top. You're talking about $95 a square foot, $90 a square foot. There's going to be a lot of tenants looking to be in Manhattan and they can't afford it. That Class B space, just like Park Avenue South did, that will fill up.
What about, where do you see this? Where, when people come to you, the funds and other people asking for your advice in looking at a market, how do you tell them, and they ask you about Lower Manhattan, and people are now looking at the Hudson Yards. I mean, this is, you have a lot of property that recently has traded at very high prices in the Hudson Yards. One of your clients sold.
We just did the biggest deal on 34th Street.
Right.
That was a second sale for them, too.
Right. So what's happened is, the Hudson Yards are very nice, but, at least Related is doing it with Oxford in a very systematic approach. They're not building any spec office building over there. But there's a spec office building on 40th Street. I was walking today, Gary Barnett's Gem Tower, the other side of the building, it was spec and it's empty today, okay? There are a couple of buildings, that are, and 3rd Avenue, you can still probably get rent at $40 a foot, $45 a foot.
I think you can. But back to what Josh said, if these folks would price this at a little lower level, I think it would lease
I think
pretty
so.
easily.
People are
But if
always
you want to
looking
hold
for-
out for the
People are always
top
looking
dollar.
for new Class A space. So it'll shift over and then
But
you
you-
get
but
conversion
The
of
trouble
properties.
is with the internet, every day you're reading this guy's renting out for $50, this guy's renting out for $90, this guy's selling for $3,000 a square foot, and everybody thinks they can do the same thing. The information is too free-flowing, too exaggerated. The brokers are exaggerating what they're able to get. And before you know, people are overpricing, and there is space going for nothing.
I'll give you a great example. When Capital One was looking for space, and Mike and I were talking, 280 Park Avenue, which is owned by two REITs, Vornado and SL Green. They've spent millions of dollars renovating the property, and they have not signed one tenant to that property.
You don't
And
read
we're-
about those.
Okay, we're talking about close to 1.1 million, 1.2, 3 million square feet of space. And nobody's biting right now for that. And Park Avenue is still a prime
I think
location,
they're not biting at what they're asking.
which
I
is,
think there's
which is
plenty-
what Josh...
Plenty of interest. It's a
yeah.
nice building. I think they've done a great job. We were very close. But
I
we-
personally don't see how convenient the West Side is for access. I mean, you're trying to interact with the lawyers, with the accountants, with the customers. You can't get to the West Side. And even when they get that one subway stop in, it's going to be very difficult to access.
It's one subway stop.
Yeah.
It's like I went to Williamsburg a couple months ago with my wife. We took the L train. It was a Saturday. It was packed. We took the first stop. You can't get off. So what we're going to have the one subway stop at 34th Street and 11th Avenue, 10th Avenue, and that's supposed to take care of everything, including all the apartments and everything else.
I think it's going to be a disaster.
Yeah, that's impossible. That's impossible.
What
I
about
mean, traffic has just gotten worse.
Oh, it's terrible.
In just the last 10 years I've been here, seems like there's construction on every cross street. Trying to get crosstown is a nightmare these days.
Yep.
I thought it might be a little better this summer. I spent some time yesterday and today trying to get crosstown, and they keep closing lanes on the avenues to create bicycle lanes and parking. And, it's a challenge. So I think one thing they've got to do is try to work a little bit on the traffic, or because you're not can't create subway stops overnight.
But part of the traffic difficulties, besides the new construction and everything else, was partially created by Bloomberg in certain markets with the areas stopping, like in Times Square, you have streets.
Pedestrian.
the pedestrian markets over there. They've cut that down, and that's had a major effect. I mean, has the pedestrian markets been in effect in downtown Brooklyn also?
No, it hasn't really impacted yet. I mean, there's still plenty of pedestrian traffic. I actually just walked in from the other side of the street to come here, and near the Empire State Building. You can't pass. I mean, you just can't walk.
Well, that's tourists.
Yeah, well, tourists have taken over a great deal of the sidewalk space, a great deal of the traffic space. You have the buses going along. They're good for us, they're bad for us. And if they stop traffic, it's not good for us, but maybe good for the hotels.
Well, 54 million people or so, I think the number is.
God bless them.
At Rock Center up by me,
Yeah.
it's packed. 42nd Street, it's packed.
what a pack.
34th Street by the Empire State Building, it's packed. You know, I look at it and I complain, then I say, God bless
Yeah.
Right.
that they're here.
I hate work.
Because they keep putting people, 35 million room nights. You know, you can't.
I mean, New York City's reinvented itself. They have hospitality like never happened before. The tech seems to be catching on. And by the way, that's one of the reasons why New York City is so popular, because you have a different type of people coming in here that don't want to commute. That's why there's so many people looking for housing. You have people coming in from all over the country. The smarter people, the tech people, the creative people want to get married, all the people, they're coming here.
Kids love it, and they do not want to commute.
That's right.
They will pay whatever it takes to be here.
I got an email from my cousin whose kid is in New Jersey looking for an apartment. It says, do you have an apartment? He wants a $1,500 a month. I said, no.
With 3 roommates.
It doesn't exist.
Right, with
But
three
you know what? But you bring up something which Mike was saying before on what they doing some financing on the Jersey side over there. You can go to Jersey City in a brand new building with all these amenities right on Journal Square, and you pay. As I was saying, Gary Jacobs at 92 at Lincoln Center, we're talking 42. Or okay, and in a couple of months, my friend Alan Goldman at SJP is opening up in Fort Lee, which is going to be a test of what's going on, and they're planning to get about $38 to $40 a foot, right at the George Washington Bridge. So these are convenient situations, and I think part of that, you know, even though, as somebody said, they want to be in Manhattan, but they also have to be realistic that you don't have that much availability of space and everything else.
I don't know, young people aren't realistic.
Right. Young people want to they want to walk out
That's
their
right.
door. You say, what's the difference? It's a huge difference. It's a commute. Even if it's 20 minutes, there's a difference between walking out your door and living in Union Square and being in Union Square Park and seeing it's so
Vitality.
vibrant.
And when
it's
you
so
leave
vibrant.
work, you want to walk to happy hour
Yeah.
as a kid.
Well,
That's what you
and
want.
you don't want to try to figure out how to get back to Jersey at
Exactly.
12
That's true
o'clock at
too.
night.
Right.
Yeah.
So therefore,
Or
they'll
whatever
live 4 in a room if they have to and spend, do that.
So in summation, how do you see the next year and a half?
The next year and a half, New York City, I think that the de Blasio administration won't have, in that period of time, a tremendous impact, with the affordable housing. It will hurt us a bit. But the reality is I think things are going to stay kind of the same. I don't think things are going to blow out of the water and get even tremendously more expensive. But you look at Hong Kong, you look at London, you say it can't get more expensive. Yes, it can.
Okay.
But I don't think it's going to get more expensive. I think we're going to be stable.
So in a couple of months, we'll come back. We'll see if our ideas and predictions come through. I'd like to thank Mike,
good.
Dennis, Fred, and Josh, and I'll see you next week.